All right, so right now in the industry, it kind of depends on when you're watching this video, but the dust up right now is the change in loan pricing. And I wonder if you guys could take a little bit, I don't know who wants to take the first question. I'm sure I want comments from both of you guys because I definitely want to. So this is what we're hearing there. What we're hearing out on the street is you are going to be, a borrower who has a higher credit score, I believe it starts at 720 or 780, where they will be penalized and essentially are subsidizing the risk for, let's say, a higher risk borrower. So maybe one of you guys could start and tell us what's going on there.
Yeah, so I always like to explain the why so that people understand. So I'll start there and then I'll let you explain the heat grid. How about that?
That sounds good.
So rewind as to how this came out. So Fannie Mae and Freddie Mac are government-sponsored entities. So they're not owned by the government. I mean, they're for-profit companies, but I can tell you that behind the scenes, they operate at the mercy of the government. So if you rewind back to 2001, there was a memo that came out way back then that said, hey, Fannie and Freddie, you want to keep getting tax breaks? Guess what? You just have to make 70% of your portfolio low to moderate income. Wow. You got it. So then if you fast forward to 2008, that's how that all turned out, okay? Yeah. Because that's when we saw Fast and Easy and all that stuff. Mm-hmm. So now history's kind of repeating itself. I'm a little scared. Mm-hmm. But now what's happened is the same people, the government, have said to Fannie and Freddie, hey, you want to keep getting those tax cuts? All you got to do, hey, it's real simple. All you got to do is figure out a way to make sure that home ownership is possible for the underserved community. And the underserved community is usually people that have lower credit scores, mm-hmm. right? So Federal Housing Finance Agency, which they're really over the conventional arm, they got together, the guys in the boardroom, I'm assuming, mm-hmm. and they came up with a plan that they thought would accomplish the directive that they've been given. Mm. And so they came up with this, I call it the heat map, but I'm going to let Wade talk about it as far as who it affects, and then we can talk about how to navigate around it. There are ways to navigate around it. But if you want to talk about the grid, we can go from there.
Yeah, I'm not sure exactly what you mean by the grid, but
it's a color map.
I will give a few thoughts. I'll let you cover the grid itself. But cool. At the end of the day, I mean, I believe in the objective of trying to help more people own homes, right? I think that there's something admirable about that. I think the average American retires with about $250,000 in net worth, and most of that is in his or her primary residence, right? Mm-hmm. So that's a very admirable thing. I think the way they're going about it, there are different opinions on that. Basically, for the person who has a higher credit rating and maybe more money to put down, they're going to pay about an extra $10 a month for every $100,000 is basically what I think the numbers are coming out to, from what I understand. Mm-hmm. I'm sorry, $100 a month for every $100,000. And then on the other side of the spectrum, the lower qualified borrowers who have lower FICO scores and less money to put down, it's going to be the inverse. So it's truly a subsidy going from one side to the other. And, hopefully it accomplishes goals that are important, but at the end of the day, most of the pricing is usually based on risk. Mm-hmm. And so this is definitely shifting it, and you're going to have more people who qualify for loans now that are riskier, and there could be implications to the overall economy and the housing market, because that is in large part, like you said, what led to some of the challenges in the great financial crisis back in 07, 08, and 09.
Mm-hmm.
So on these particular borrowers, are they using it to buy mortgage insurance? I mean, what are the GSEs really doing? Is that what they're just putting in, or they're just making somebody else's mortgage cheaper? Maybe that's a better question to
So
ask.
what's happening is, and so I'll send you the grid so you can send it out, but if any of you follow Rob Krishman, okay, he's a good mortgage blog writer, and he's got a great, it's a whole grid that he did, and he put colors on it, so that's why I call it the heat map. So basically, the people that it's affecting the most are 720 to 759 credit, and 15 to 20% down, because those borrowers are perceived by whoever made these directives, are perceived to have the ability to save. So they might not notice it as much, I guess. So that when they're charged more, so for those people, there's about 125 basis point hit, which is usually about 0.3% to the pricing. So LLPA stands for loan level pricing adjustment. So if you're a conventional loan, it's conventional only. If you're in that mix of that grid and you're be like, oh, I'm so excited, I've saved my 20% down, and you're between 720 and 759 credit score, you're going to have a higher rate.
Yeah.
And then the green part of this grid, that part of the grid is red, okay? And then the green part of this grid is the very bottom corner, which is below 640 credit and 3% down. And it's you get
the most
this
risky with the least amount of skin in the,
that's right.
in the deal. Okay.
So then you get a 175 basis point betterment, which is about 0.5%. So it's interesting. You want to know what I really think?
Yeah. Oh, sure. Just know this is going out to the masses here.
So honestly, from being on the front lines, I mean, I've closed conventional loans for homeowners, primary residences for a long time. And those borrowers that are below 640, y'all, they're not getting approved. They don't make it through the automated underwriting. So and even on paper, they can't get mortgage insurance. It's not in the guidelines. So this green part of the grid that's this 175 basis point betterment, it doesn't even apply. So Fannie Mae's going to have to totally rewrite their guidelines, which I haven't seen yet. So I'm like, okay, these borrowers up here in the middle that have the money to put down, more is being charged. So that money's coming in to Fannie and Freddie, and the thought is that they're going to redistribute those funds by giving to those people in the lower part of the grid, giving them subsidies.
Right.
Okay? But there's a bottleneck because they're not going to be putting out as many subsidies as they're taking in because those people in that part of the grid aren't even qualifying for the loans anyway. So that's where I have an issue.
They're going to adjust the automated
the guidelines
platform.
They have to because and it hasn't come out yet.
It hasn't yet,
but that's got to happen because it's not going to help who it's intended to help.
Yeah. I read a stat